Hello everyone and welcome to today's webinar. My name is Lucy Heavens and I'm VP of Marketing at Hokodo. Over the next 45 minutes, we're going to be having a look at the very topical theme of embedded finance, and particularly how it can drive new revenue streams. So a couple of quick housekeeping points before we start. Firstly, the format for today's webinar is a panel discussion. So I'm going to have a very informative discussion with my lovely guests here today. We've allowed plenty of time for questions and we really do want to encourage you to ask questions. So please type them in and we will address them as part of the conversation. And then lastly, a recorded version of this webinar will be available and sent directly to your inbox after we've finished. So to set the scene a little bit here, there was a recent report that I read by payments firm OpenPaid, and it showed that 92% of business leaders are planning on launching embedded finance over the next 5 years. And then some estimates expect it to be valued at 7.2 trillion by 2030. Embedded finance is growing and it's growing super fast. So just 5% of respondents, though, said that they fully understand what embedded finance means. So interestingly, this lack of understanding doesn't appear to have diminished any kind of discussions in the boardroom or strategic planning or action, because everybody seems to be going full steam ahead. So there's 4 main areas of embedded finance, which is payments, lending, banking, and insurance. So we're going to take a look today at embedded finance as a whole, but really kind of drill down into that embedded payments part as well. So let's kick off with some introductions. So I'm going to ask each of you to introduce yourself, give your name and your job title. But I also want you to have a think and let us know what embedded finance means to you. How would you define it? Sanya, would you like to start?
Sure, yes. So I'm Sanya, I'm VP Operations at Hokodo, where I'm responsible for supporting our customers and working with different internal teams like product or customer success to help our merchants get the most out of Hokodo's products and services. And for me, I think embedded finance is essentially just placing a financial product in a non-financial customer experience or journey. And really embedded finance solutions, they just meet the customer where the customer is, with a product when they need it, whether that's a loan, payment terms, or an insurance plan.
Thank you. Thanks, Sanya. Ope, would you like to go next?
Yeah, thanks, Lucy. So my name is Ope Alomo. I'm Director for Partnerships and Strategic Innovation at Citi. In my role, we look after enforcing, or should I say, enhancing partnerships we have with fintechs, peer banks, clients, and that kind of like align with our strategic objectives to transform our business and operating models. And also sometimes we do corporate venturing into those partners. To me, embedded finance, I think quite similar to what Sanya said, is integrating a payment or a financing function into a non-financial process. It could be things like procurement, it could be things like logistics, it could be marketplaces, to kind of like increase the overall client experience and basically provide a call to action that if at the right event that a client or a customer or a user can basically initiate a financial transaction without leaving that environment that they are working, whether it's a procurement environment, whether it's their ERP, whether it's a marketplace, or whether it's a logistics service.
Brilliant. Thank you very much. Sophie, over to you.
Yeah, hi everyone. My name is Sophie Winwood. I'm an investor at Anthemis. Anthemis is a venture capital fund focusing on everything to do with the future of financial services. We've been talking about embedded finance before it became the kind of cool word. But I really think that is kind of our thesis is really being born true with, all of everything is becoming a fintech, verticalized fintech, and of course the massive trend of embedded fintech and finance. Not to repeat kind of what has already been said before, but I think for me, it's really sort of in context financial services that is powered by more personalized, granular data that enables a kind of real-time view of, the ability to provide financial services to the right customer at the right time.
Perfect. That's brilliant. Thank you. Good to see that we're all aligned. Okay, so let's start off with some questions. So what I'd like to kind of explore first is the pain points really driving, you know, where the or how embedded finance came about. You know, what were the pains in the B2B world specifically that were being experienced that have made you know, these financial solutions, embedded financial solutions, possible. Does anyone want to start with that? Or I can pick on somebody.
No, I can take a stab at it. I think about 4 years ago, before the pandemic, one of the things that we were looking at was we noticed a very strong pain point, and I'll take this from a trade angle, where there's been a big disconnect with the flow of goods and the flow of funds. And when our corporate clients were trying to either procure goods or services, they were having a lot of like data recon issues. It was complicated and, you know, time consuming for them to get the right financing support or payment need for a specific either procurement process or delivery process. And we also noticed that they weren't getting the right access. They weren't getting the assessment process was also quite painful. And it was funny enough that the data required to do that is all the data that they've shared and exchanged while trying to actually ship a good or buy goods from a provider, whether it's a purchase order or invoice. So we were looking at how could this be kind of like aligned. So like a business model of a marketplace that has delivery, logistics, how can we align this with a operating model of financing? And that's, like Sophie mentioned, being able to get data real time from a process that can drive a financing decision became something we started getting interested at Citi, and we were kind of like focused on deeply to see how we can solve the problem. So I would say challenges around reconciliation, speed of access to financial products, suitability based on improper assessment sometimes, because it's difficult to get the data if it's kind of disconnected, and also the safety, right, and responsible financing. So I think these were kind of like challenges that are becoming more obvious as we're moving to more real-time, instant type transactions, and to be able to match that speed of the client experience in identifying goods or things that they want to purchase to getting the right financial, should I say, support or need or working capital solution, or even ease of payment, made it clear that we needed something like embedded finance.
Yeah, fantastic. Thank you. I think in the, you know, particularly in the B2B world, we always say, don't we, you know, it's the speed of which, you know, the digitization of everything is happening for B2C. You know, it's the embedded payments, the having options to, you know, buy now, pay later, all of those things. And then when you come into the B2B world, it's suddenly, you know, very, very different, but it shouldn't be, right? How you do your own kind of finances and purchasing online from a B2C perspective shouldn't be different than when you come to do the same things for your business. So it's interesting. Sanya, do you have anything to add to that?
Yeah, I think jumping onto what Opie said, one topic that's I think top of mind for all business, but especially smaller businesses, is around cash flow management. I've read that on average, most small business owners have less than £5,000 kind of available for financial crises, which for them makes them highly sensitive to kind of how quickly and easily they can get access to finance when they need it. So and plus smaller business owners usually also get less favorable payment terms than, you know, large corporates, even though they are the ones who kind of, you know, would benefit the most from having access to you know, to loans or just attractive payment terms. So yeah, I think that's kind of a need that's always been there, and there's been financial products for it, but just how quickly and easily you can access those, I think is shifting.
Absolutely. Yeah, it's a really good point. Sophie, do you have anything to add to that?
I think the only thing that I would add is, you know, another way to look at this question is what are the trends or kind of positive wins that are enabling this. And I think, you know, as other panelists have mentioned, this move from a non-digital world to a digital world has provided the opportunity to start using technologies in ways that can embed these solutions. However, I think that does come with some complications, which is these traditionally non-tech companies now having to become tech companies. And so then there's a kind of question of, you know, do you buy, do you build, do you outsource? But kind of really looking at these kind of businesses through the lens of technology opens up a massive opportunity, but also comes with its complexities given the kind of more complex nature of business.
That's a really good point, really, really good point. So you have a lot of the digitization that kind of took place. I hate to bring it up. I feel like every webinar you have to kind of say the word COVID at least once, but you know, with the whole kind of pandemic, everything, the acceleration of everything kind of going digital, but then you still got those, you know, legacy kind of systems that are really hard to integrate with. You still got the offline kind of sales process. And I suppose it's just bringing everything, you know, together, so you've got that consistent or consistency across all the channels.
Yeah, and this is it's interesting what Sanya and Sophie said. I mean, SME financing, like Sanya said, like the small medium enterprises. I mean, financial service providers usually complain that this category of companies their data is not publicly available. They can't access their data. Is one of the reasons why access to financing is a bit how should I put it, hard for them. And it's funny, like if we actually get into the weeds of the daily processes, which is what embedded finance will bring, you can actually access their data a lot easier to be able to provide them the financing that meets their needs. And if we look at how technology has evolved, back to Sophie's point, I think the internet brought a lot of ability for people to be able to browse things they want at their convenience and pay for it. But now that we are having a more kind of like big data storage and data vats around, it's creating a new revolution now where you cannot just, it's not just about speed of access to information, but you could also get data, right, in such a way that you could leverage high processing speeds and power using cloud technology to get analysis out of it. So I think technology, I agree with Sophie, technology is playing a very good role in this. And at the same time, it's a good opportunity to kind of support the SMEs better, right? Leveraging data in a way that we couldn't before, denying them a lot of financial products.
I think that's a really, really interesting point, because I think, yeah, you're absolutely right. We have all of this data now. We know we've got enough data to make decisions, but what we need to do is to start using it a little bit more kind of proactively. So I suppose we know there's a lot of businesses, for example, that would benefit from using credit, but, you know, why kind of sit back and wait for them to ask for it? Because at the point they ask for it is normally the point where, you know, they kind of, they're sort of more in desperate need for it, I suppose. There are benefits to kind of having sort of, you know, credit available to them, offering those sorts of, you know, buy now, pay later type solutions. You know, why not have that data available or use that data to actually offer them the service beforehand? Or offer them any financial product that they need beforehand, not just that. Okay, so maybe we can have a look now, okay, you mentioned actually about that kind of overall like checkout experience and, you know, the whole kind of payments experience. By the time that the B2B organization has filled their basket full of stuff or decided that they want to book this particular service, they then want that kind of, it's that instant gratification. They just want it now, right? They don't want to have to, you know, fill out forms or, you know, wait for kind of payment to clear beforehand or whatever. They just want to go through this really, really seamless kind of payment experience. So how is embedded finance making that possible? How are embedded finance solutions making that experience, checkout experience, better? Sanya, do you want to answer that?
Yeah, I'm happy to kick it off. I think the most obvious kind of improvements to the checkout experience are having the kind of the instant access to a financial service and getting a decision. So, for example, a credit decision or payment terms decision in real time. So a lot of times, you know, in the ideal scenario, the buyer, so the business customer checking out, they wouldn't even kind of notice that there's anything kind of going on in the background, because it might all be on the single page. And, you know, if they're eligible, let's say for credit, they will see how much credit they're eligible for. And then if not, then, you know, they might not even see this option. So for them, it would basically be a pretty frictionless and fast decision. You know, they would be able to check out then and there, buy complete their order and receive access to the financial product that you know, they were wanting to use to purchase this product.
Makes sense.
And to add to that, you know, we work with corporates a lot, and Tanya made a very good point. I would say it's kind of like a dichotomy, right? So you have corporate buyers on one hand who want to pay as late as possible to manage their cash flow better, so when they receive funds. And then you have merchants and sellers on the other hand who want to receive payment as soon as possible so that it can help their cash flow. And I think this is where the checkout experience now becomes brilliant with embedded finance, because with the right data, a corporate buyer can be qualified to pay later, even before maybe after they receive the goods, or you know, when after the service has been delivered. And with the same assessment, a merchant or a seller can be paid immediately, pending when the funds are received from the buyer. So in a way, leveraging data effectively, the corporate community can manage their cash flow in a way that kind of like mirrors trade needs, but at the same time, doing this in a responsible way that ensures that the right assessment is made in the shortest of time, not killing the experience. So the corporate buyer doesn't have to wait 24 hours after to see whether they can check out. They can actually check out and get that financing like immediately. And it's interesting to see the evolution from going to a traditional store to pay and building a credit history over time with a merchant before you can get payment terms, to being qualified for payment terms like that in a matter of seconds. It's good times, I must say.
Thank you. Sophie, do you have a thought on that?
Yeah, I think you know, that I think it's all been explained really well, the kind of positives. I think the things that are still kind of a really interesting transition as we kind of move this B2B offline to online is, you know, there are multiple ways that businesses pay other businesses. It's not like consumers where you kind of just check out, right? You have invoices, you might have to raise a PO, you might you know, do bank transfers, etc. And so I think the ability for technology to offer those variety of payment options at the speed that it can, I think is really interesting. Do I think we're there yet? Not quite. You know, I think that the sort of B2B payments infrastructure is evolving. KYB is a big kind of interesting sort of, probably deserves another webinar on its own. But I actually think that, you know, once you can provide all of those offline payment options that you can online, then you really are creating an environment where business can be delivered kind of more efficiently, effectively, and hopefully, you know, for the best terms on both sides.
Such a good point, really. And it kind of goes into the next question a little bit, which I was going to ask, which was like, how can B2Bs leverage embedded finance to gain a competitive advantage? I'd like to kind of unpack your point a little bit, Sophie, because I love that, where, you know, if we took that kind of one step further and said, let's use that data to add a little bit of like personalization to that offering as well. So if you've got customers where you want to offer them certain payment terms, and then other customers you want to offer them different payment terms, obviously you can use the data, you know, and only present to them the payment options that are relevant to them.
Yeah, I think the like personalization is really, really interesting. And I can see that really taking off in the next year or two. You know, financial services is one aspect of it. The way that you buy what you buy is kind of personalized to say where you're located, you know, what's the most potentially ecologically friendly way to get the stuff to you. And then kind of, I think the other thing that's really interesting is, once you kind of start to embrace embedded finance, providing credit, for example, at checkout, you know, what data does that provide you in terms of if I provide credit to this set of customers, they are more likely to transact within X amount of time. However, this customers actually does need a bit more hand-holding. How do I automate that hand-holding so that I can transact faster using technology? I think that, you know, it's one point in the customer relationship, but actually it can go a lot further, both into the customer and then in the back end with the seller as well.
I love that. Yeah, Sanya, that's something, you know, at Hokodo we sort of see, don't we, with that sort of data that we have access to.
Yeah, exactly. Yeah, to Sophie's point, I think the personalization piece is kind of the one where it can really make a difference to the business customer's experience. So for example, as mentioned, kind of seeing, for example, their credit limit when they're checking out, which is based specifically on their data. So that might take into account, you know, their kind of their company information, financial information that's available through different data providers, but it could also take into account their past purchasing behavior. So maybe kind of on paper, they wouldn't necessarily look like you know, like a super attractive kind of customer to give payment terms to, but then you as the seller or the merchant, you would have the history of how they've, you know, how much they've bought from you, the basket sizes, their payment behavior, and you may have this inside data that actually this is, you know, this is a business that pays always on time, etc. So then this gives you kind of additional kind of insights to be able to make a more, I guess, more informed decision and to be kind of be able to better assess the risk of, you know, extending credit or payment terms to that specific business.
No, yeah, I agree, and not that I'm giving accounting advice, right? But if you look at it, right, back to Sanya's and Sophie's point, the big corporates today, the data is publicly available, their credit profile is publicly available. They can basically enjoy trade credit with ease because people can really easily know what their credit worthiness is. But it's not the same for SMEs. SMEs usually have to go get loans, right, on balance sheet. But with leveraging data suited to an SME to be able to properly assess them provides opportunity for them to use trade credit, which is basically a payable. So it's an off-balance sheet term, makes their, from an accounting perspective, provides them more gearing ratio, which means they can have access to extended payables booked as a payable on their books, as opposed to a loan that hits their gearing ratio. So I think a major advantage we're going to be seeing as embedded finance evolves, and we're getting data that basically allows us to qualify and assess SMEs better, is their going concern status will become better, and then they can basically consider loans for things that are more infrastructure in nature, as opposed to using loans for commerce and trade. So it's a part I'm passionate about, because I want to see how we can promote SMEs, and I think I really do agree. The more we can get that relevant data, the more SMEs can benefit more from trade credit as opposed to outright loans.
It's funny, it's a focus on the word, isn't it? It's, you know, the embedded goes so many different ways, doesn't it? You've got the embedding in terms of embedding it into the checkout, you know, or the buying process, but then you've also got the risk of sort of making it sound really fluffy, but, you know, embedding it into people's lives, right? You know, rather than using finance as the kind of, you know, the get out option at the end, like you say, to a loan to keep you going or keep your business going. It's actually embedding it into kind of the day-to-day you know, finance of your business. The same way that kind of banking, you know, we've moved away from the times when, you know, decades ago, when you did your banking, you know, at the weekends or something, where you sorted all your checks out and paid all your bills, and when you know, you had to make time to go into the bank. Now all of our banking and our personal lives is embedded, isn't it? It just happens in the background. That's kind of what we want from a business perspective as well, don't we?
Sure.
So one of the other things I noticed on that survey that I mentioned earlier is it said that it's actually brand rather than financial considerations that are fueling this kind of push towards embedded finance. So retaining the front end customer experience, so that checkout experience, and increasing the number of customer touch points, you know, with the brand that ranked as the 2 top most important aspects of embedded finance. So my question to you guys is, how much work is required in the back end versus the front end of the embedded finance? So what I mean by that is, we talk a lot about embedded in the sense of like integrating systems and all the technology stack and everything that needs to flow all the payments, versus we don't want it to look like lots of clunky sort of processes put together in the eyes of the customer experience. So how do we balance the two there? Okay, do you want to go first?
Yeah, that's a very tough question, Lucy, because back to what Sophie mentioned earlier, we're not there yet with embedded finance in terms of how deep we wanted to go. And one of the major reasons is the challenges we face in the back end. It's quite complicated to integrate with different systems, because at the moment we don't have a high level of standardization in terms of how different systems in different operational models talk to each other, from logistics to marketplace flows to checkout flows to financing systems to payment systems. There's so many disparate systems. Data is also not kind of like, how should I put it, uniform across regions. So it's kind of like a bespoke, right now it's almost like a bespoke backend setup per geography, or sometimes per industry type, right? And this basically, I would say, is also has to be done in such a way that the response time and the freshness of the data is top priority, or else the experience you're looking for at the front end will be compromised, and the soundness and the safety of the financial products will also be compromised. So it's one of the areas where I think as an industry, we would need to do more together collaboratively. I know there's some things that are competitive, but for me, this is the area that requires a lot more collaboration in the industry. How can we standardize messaging? How can we provide the standards to make sure that data collection and data availability is kind of like uniform and interoperable across regions and geographies? And also, the skill set is also quite important, right? Having the right skill sets that are like data engineers and also enterprise integrators. It's a lot of work, Lucy. I'm not gonna lie. Like the back end, and I know Sanya will connect to this.
You're not making this sound very attractive, Upe.
No. It's like an iceberg, right? You see this beautiful iceberg on top of the water, right? But beneath it, it's kind of like a huge bed of ice rock, right? That's how I see the back end out. It's not to sound like it's extremely complex and difficult, but it's just to call out the work that needs to be done, such that so that we can get embedded finance to the stage where it's a global phenomenon across multiple industries, and more people, especially in the SMEs part, can benefit from the value that it brings. But yes, there's a lot of work done in the back end to drive that beautiful experience on the front end when clients are interacting at checkout, interacting at delivery stage, or all that. Making that very simple and easy requires a whole lot of like data aggregation and system integration.
Yeah, thank you. Sophie, do you have any thoughts on how we can make that easier?
Yeah, I think one of the things is I feel like we've had a lot of pressure from technologies companies to provide this kind of frictionless financial service experience, where I actually think that we need to take a little bit of pressure off ourselves here. Like, we're dealing with money and credit. It's the most important thing you can do in a business. And so you need to get that right, and spending time ensuring the KYB is correct, ensuring the underwriting is correct. That is very, very important. And so while I think the end goal is to provide this kind of frictionless experience, I think it is going to take a bit of time to get there. And I think that's okay, because it is such an important part of it. And so, I think the other thing that's really exciting about the environment today is that you don't have to do this from scratch anymore. There are providers that can provide these, and they are experts in that field. And so you're not having to go and build all these different parts and kind of integrate and all that sort of stuff. So I think it's really it's a lot of work, and it definitely requires standardization. But I think, you know, taking a bit of time up front to understand where your kind of value add as a provider lies, and then understanding where you can leverage third parties, I think is going to be a really kind of important way to assess this.
I love that. And, you know, if anything's going to go wrong, it's going to go wrong, like you say, from the kind of the reputational point of view. So, you know, if it is brand that is the driver, or the, you know, that's fueling the push for this, then that's so true. Yeah, I like that. Sanya, do you have any points to make on that?
Yeah, well, I mean, my view is obviously colored just by from, you know, what I know from Hokodo's integrations with different merchants. But broadly, usually kind of the, you know, some of the challenges are that you need to get kind of the merchants or the marketplaces backend system talking and exchanging data with the fintech providers backend system. And then you also need to get kind of these systems talking to the front end, so that the user, so the buyer, you know, they're able to see the, you know, real-time decisions, credit decisions, etc., and how much work it is for the merchant. So it's not trivial, as you know, as Opa said, but how much work it is for the merchant depends also on what the existing kind of tech stack is that the merchant, or, you know, the marketplace is using. So for example, if you're using Shopify or Magento, then usually it tends to be a bit less work for you, because there's already, you know, a lot of you know, there's usually already kind of other plugins. For example, Hokodo has a Magento plugin, and where that kind of, you know, takes a lot of work kind of off your shoulders, because then kind of your Magento plugin you know, just talks kind of to the let's say to the Hokodo plugin. Whereas if it's an API integration, then it's a bit more involved, because you need to you know, you need to do some more backend work to get, you know, your backend system talking to the provider's backend system. So as Opa mentioned, it does also, you know, kind of require some, you know, additional resources on the business side, you know, to figure out who do they need and how much work would be for them, and also how complex are their kind of existing systems. So yeah, so there can be both front end and back end work, but how much of it really depends on kind of what your current you know, data and tech kind of setup looks like. Yeah, exactly.
Okay.
And listen, Sophie mentioned something that I find interesting, because I think it's maybe something what double clicking into the QID aspect, which is, I mean, for consumers, right, there's so many things that can uniquely identify a consumer's. Things as simple as an email address, as simple as a fingerprint, for example, right? Uniquely identify a consumer, a human. But when it comes to a business, you have people behind the business. So it's not necessarily as straightforward as that. So I think we're getting to a good place right now, where the bit of things evolving, like there's the legal entity identifier, which basically is a unique ID that uniquely represents a company, and not just a company at a group level, but a company to a specific location, right? We're also, you know, getting regions like Europe with the EIDS systems, where they're creating digital seals, electronic seals that represent a corporate entity. And I think the more things around like corporate digital identity gets a lot of evolution, right? This is really going to power how corporates are identified, assessed, and uniquely. So it's an interesting time, I must say. I think a lot of things are converging, right? That would really, really drive how a lot of the back-end areas in embedded finance, especially in the corporate space, the B2B space, can be accelerated and streamlined.
Perfect, thank you. That's a good point. So as we're kind of moving into the last sort of 10 minutes, I'd like the audience to be able to kind of take away, you know, sort of something. I hope they've taken away a lot from this already, but thinking about, you know, if we have some merchants or, you know, sellers that are looking to kind of start their embedded finance journey, you know, where is the best place to start? What do they start kind of thinking about? What's the first kind of couple of actions? What advice would you give them kind of in your experience? Sophie, would you like to start?
Yeah, I think you know, there's a lot of good sort of articles and media online. I think, you know, calling up someone knowledgeable in the space, for example, Hokodo, and I know that you guys have a lot of great reports, but I also think kind of thinking about starting with your payments provider is a really important point, because that is the first interaction. Really understanding what that payment provider can offer, what they can, who they can integrate with, and kind of how they look at the evolving landscape is really important. The other thing I would say is really do your diligence on the company. The space is massively evolving at a very, very quick rate. Players are emerging left, right, and center. You know, you might want to work with an emerging player because they're new and they'll really focus on you and your needs, but probably the technology won't be as developed as, say, a player that is a bit more further down the line. So look at kind of when the company was established, how much funding it's got, and then really drill in to what they can offer before you kind of sign the dotted line. I think that's a really important part.
Fantastic, thank you.
Yeah, good point, Sophie. I also think I think you made very good points in terms of how you can identify the right partner and get the resources. But I also think back to the whole aim of embedded finance, which is to improve the client experience. As a prerequisite, I think companies should try to understand the user journey. What are the friction points? What are the trigger points in the user journey that could raise a financing decision? What are the ideal data collection points that can be fed into those trigger points to create the right assessments? I think a bit of work needs to be done by the entity to see that user journey and make sure that even by trying to embed financial services into the user journey, it's actually solving for the friction points and not adding additional layers that could be frustrating, and not collecting too much data. Just collect the right amount of minimal data required, right, to be able to make those assessments at the right point where a decision is easy to make, and also where the experience is enhanced, right? I think that's, in addition to the great points Sophie made, I think that's another area that people should look at, and that way they get the best value from working with the partners, and being able to get that enhanced client experience out of the whole process.
I love that. Yeah. I mean, one of the things that we do at Hokodo actually, which is quite interesting, some of the prospects that we work with, we will, you know, a lot of the times the merchant might think maybe that their customers need, their buyers need B2B buy now, pay later, you know, like the ability to defer payments, but, you know, maybe they don't. But like you said, data is key. So actually, you know, we might survey a portion of the buyers to kind of ask them, you know, what sort of payment terms that they need. And then, you know, once we get that data back, and then you can make decisions kind of based on the data rather than just what you think that your customers need. So I think you're absolutely right with that, mapping out the customer journey. It's so important. Sanya, from your perspective.
I think one point I would add, apart from really understanding, kind of identifying your customers' needs, it's also trying to understand your own needs. So, for example, if you as a business want to offer payment terms or credit to your customers, but then in turn, you know, what are your kind of ideal what are your ideal factors in terms of, you know, how quickly do you need kind of to get paid up front? So are you looking to reduce your kind of your cash cycle if you do kind of issue those loans to your business customers? You know, how frequently do you want to get paid out for the orders on which you do offer the payment terms? You know, how price sensitive are you? So kind of as many factors that go into what the fintech providers can offer you as possible. So the better idea you have of what you need and what your customers need, the better you can kind of use this criteria to, when you're speaking to all the different providers, to understand who can best serve you and your customers.
Absolutely. We've had a question coming from the audience that I'd like to bring up actually, and Ope, it's one for you. They're asking what kind of live customers that you have that are on that have an embedded finance solution.
Good question. In fact, recently partnering with Okodo, we just launched a BNPL service to Covento, a renewable energy marketplace that offers renewable energy equipment and maintenance parts to different corporate buyers, supported by multiple merchants, right? And we've been able to offer, leveraging Okodo's technology and our financial expertise, being able to offer payment terms on demand for buyers, right? Suited to their credit profile. So that's live at the moment, and it's something that actually will promote more use of the marketplace, because then it fits directly into the buying nature of corporates. Like Sophie mentioned earlier, corporates don't pay with debit card or credit cards. They have structures in place that will process orders, have the maker, checker, authorizer. So this basically fits very well into their buying behavior, and it's done instantly, leveraging Okodo's expertise in credit assessment methodology.
Fantastic, thank you. Sophie, I just have one more question for you actually. Who's doing embedded finance really well that you see in the market?
Yeah, great question. Obviously gonna say you guys.
I was going to add that onto the end. I'm not fishing for a compliment here.
We are investors in Hokodo, but that isn't the reason why I'm saying that. So I think, the trend that there are players within the payment space that are playing in the buy now, pay later space. There are also players in the insurance. We haven't really talked about insurance, but I think insurance is really, really interesting, kind of guarantee insurance, and also kind of other insurances at point of sale. I think the area that we're looking at that I think is really interesting at the moment is around these like hyper verticalized fintechs that are offering like very, very personalized financial services based on a specialist. So we have an investment in a company called Denim out in New York that specifically focus on freight intermediaries who have an interesting complex flow. They have kind of shippers and carriers being able to offer quick pay for carriers to pay their shippers, but also building out other financial services off the back end. So I think those sort of, and there you're getting really interesting granular data with really great underwriting. And so I think we're looking at sort of different aspects. For example, the medical industry is an area that we're looking at, which is really interesting. So yeah, I kind of, not to name like a million names, but there's the kind of the things I think we're focusing on at the moment.
Yeah, it seems to be kind of, with the couple that you mentioned, it's those industries that are traditionally maybe a little bit more, offline, or, have, more kind of complex buying sort of processes. That's where the probably the greatest gains can be made from like embedded finance solutions. Okay, cool. Thank you. There's so much information. I made a few notes, so hopefully, and please correct me if I'm wrong in any of these. I'm just going to try and kind of sum up a little bit, but yeah, lots of benefits to embedded finance. Just to list a few, then we have improved customer experience. So these embedded finance solutions are enabling customers to access financial services without leaving the platform that they're already using, which then enhances convenience obviously for them and streamlines that whole user experience. And then increased engagement. So by offering financial services, companies can increase customer engagement and loyalty, providing more value and basically creating new revenue growth opportunities. More data insights. The data was one of the biggest points I think that was made today. And embedded finance can give businesses more data about their customer spending habits, enabling them to offer more personalized products and services, which we talked about. And then greater efficiency, I wrote down. So embedded finance can streamline obviously those more complex payment processes like we were just talking about, reducing things like transactions times and things like that, leading to more efficient and cost-effective operations. And then the final one I think I mentioned is about access to new revenue streams, which we talked about at the start. So providing financial services, embedded financial services, businesses can unlock new revenue streams, increasing average order values and the number of repeat orders and that sort of thing, creating all that additional revenue. So yeah, so thank you very much for all of that insight. Really appreciate you giving your information, all of your experience. So thank you. And thank you to the audience for joining. I hope you took away some learnings. So enjoy the rest of your day. Thank you.
Thank you.
Thank you
Thanks.
for having us. Yeah, bye.